You got to know when to hold 'em and know when to fold 'em. That's Kenny Rogers' famous song from The Gambler in 1978. Sound like a disc jockey today, but the reality is it's really true in trading. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Friday, the 16th of December. Kenny Rogers' song has it right. As a trader, you got to know when to hold 'em and know when to fold 'em. That same mantra can be applied to investors. Buy and hold is dead in the water for a long time to come. You know, silver is also having a hard time shining these days. It's down for the week, the month, and even the year. Does anyone like this market anymore? We'll look at that today. Also, Slip Sliding Away by Paul Simon, another one of my favorite songs, written in 1977. This technical formation in crude oil says it all. We'll also be looking at 3 stocks on the move. Now let's go to the one truth we count on every day here at Market Club, and that's our trade triangle technology. We're starting with the S&P 500. Here we are on the chart. You can see the action. We're below the PSAR, this little dotted line here. You can see that. And we use a default setting on Market Club. You can move it around. But here's our minus 55. We know it's a trading range. But this formation right here, if we close down at these levels, this is not going to be a good sign for this market in this coming week. First of all, we're in the silly season. The market's moved down during that time. I would not be surprised to see this market come under more pressure next week as we go into the final week before the holidays. So keep that in mind. Again, we're down for the week, and the way this market's acting today, it's not acting too well in my opinion. I think we could see more pressure coming into this market. So let's go to our next market. And easy to do with Market Club, just on these two little, you can go back and forth, you can go forward here, and then if you want to go back to the S&P 500, boom, see how easy that is? So anyway, here is silver. It's having a hard time shining these days. It's down for the week, the month, and the year. So anybody invested in silver this year is really underwater right now, unless they bought it right at the low here, and I don't think very many people did that. So the action is negative. We are minus 100, indicating the trend is down. Our last major sell signal was here, 31.19. The market's trading at 29.29. And our other major sell signal in this market was the monthly at 33.15. So we got profits in all those positions. It looks very, very good. Let's go on to gold, which is the next big market. And this market's really also not acting well at all. We're down in the weekly and the daily triangles. The only one that's positive is the monthly trade triangle. You can see that right here at 1430. And the action is, and that was a long time ago. We've held this position for a long, long, long time. In fact, if we just scope this out, you can see basically, let's just take the weeklies off and just leave the monthly on, and we go even further out. And there's the monthly all the way back in March 1st. Of 2011, this year. So this has actually been a really nice trade. Even though the market's come down quite a bit, it's still in a positive mode. However, it's getting very, very close, in my opinion, to turning around, but it also could be an opportunity. We just want to watch this market carefully. I think it's great opportunities in 2012 in this market. So let's go to our next market. And the next market we're looking at is copper. Copper just reflects what's happening in the equity markets. And of course, we were up today earlier on. It looks like we're coming off a little bit, but this market's going to be closing down for the week. And the only one that's up for the moment is the weekly trade triangle. That may change next week, particularly if we go through the 320 level. So let's watch that very, very carefully. Again, it looks just heavy to me right now. Nothing to get too excited about, but generally speaking, when you see the monthly like this from 389 and we're currently trading at 332, I think the big trends are important to watch and see how they go. We told you about when we're up here at the 360 level, top of the downtrend trade channel, resistance, boom, we've come back down. Looks to be on the defensive next week in this market. So moving along to our next market, we're covering a lot of ground today, and this is the Slip Sliding Away by Paul Simon, 1977. This is crude oil. Everybody got very excited about this market moving up over $100 again. Well, we pointed out several times before, and I put my telestrator on here, was the fact that this market had made a double top right here. There was a pivot point, and we're looking for the potential for this market to go quite a bit lower. So you can just simply count from 96, just do rough Checking your head, 96 to 102. It basically take those twos away. It's 6 points, which is 6 right here. Subtract that, and you're looking at 90 on the downside as a potential target zone. The Fibonacci number is actually much bigger than that, and I'll show you what that is in just a second. Let me just put that off and go to the Fibonacci tool, which is right here. And this is a very powerful tool. We talk about it almost every session we do here. So you click here, click on the highs, pull this down to the lows right here, and you can see we could be looking, 50% is 89.56, coincides with our other target zone of 90, so it's very, very close. I think it's a very good potential. That's another $3.30 lower than we are right now. And the 61.8% Fibonacci retracement is 86.33. So I think for the moment, the air is being let out of the tires, so to speak, for crude oil. Looks to be on the defensive. And as I say, there's a ETF you can trade there, DTO. It's a leveraged ETF, inverse ETF. It goes up, meaning crude oil goes down, and that's enjoying a pretty spectacular day today. So let's go look at the markets, the next market. Let's clear everything off the screen. And I do so love the markets, talking about them and sharing this knowledge with you, as it really can be a huge plus if you know what to look for in these markets. So let's go to our next market, and that's going to be the dollar index. As you know, we've been bullish on this market. It's worked out very well. We have a positive score of 100. We are in new high territory. We think it can go higher. We think this pullback is probably at 1 to get long. The 80 level is now acting as support. Remember, that was resistance, and now it's sort of acting as support. This kind of 3-day pullback, we're just getting used to seeing this market over the 80 handle, and I think as we regroup, we could see this market come up next week, and that's meaning down on many of the currencies. Now, this is a basket of currencies. Remember, this is not just the euro. This is other currencies as well. I think there's 14 or 15 currencies in this particular index. Very important, but it just shows you how everybody really kind of got this wrong because they were looking for a weaker dollar this year. It's actually turned out to be a positive year for the dollar. And if you go back, let's just go back to the beginning of the year, and we sort of started around here. And let me just put a very simple trend line in here for you. So we sort of started here, and we're higher for the year. Hard to believe. So we had the move down at the beginning of the year, the first couple of quarters, and then sideways, boom. And remember what we've always said in MarketClub is really the market can only do 3 things, and I'll show you what they are. They can go, you can see the market go, that's down, obviously. And that's sideways. And when you think about it, that's really all you can do. And this is obviously up. And this is the 3 major elements to a market. These are the moves to be in, the ones that go down, because you can be short the market, and the ones to be up. The sideways markets you want to use are Williams percent R and our Donchian trade channels. It tells you when the market's overbought, oversold, and trade on that accordingly. So let's clear this off the screen. Go to our next market. We're moving along. We've got some other markets to look at today for the first time. This is the euro. We talked about this. And if you look at the euro, let's scope this in for the last 6 months. This is the big level here, 132. We've talked about that on the broadcast before. The market closed below there. It's closing right on the lows. This type of formation is sort of like 1, 2, 3-day rally, not quite there yet. Very, very negative in my opinion. I think this market could open substantially lower, meaning the dollar is substantially higher on Monday. We're minus 100, and this is not a good sign for the euro in my opinion. And obviously, we think we're looking for a 122 handle on this particular market. So we did this on our Wednesday night show with Jeremy Lutzema and myself. We talked about this, and it looks like a 122 handle to us on the downside for this market, meaning the euro should go to 1.22 euro. So let's see how that works out. Next market we're going to be looking at is the Reuters Jefferies CRB Commodity Index. Again, this market looks very, very, very poor. And if you look at where we are, let's see, if you look at where we are and potentially where we, let me just see, I want to see what that low is. If we close down here, and if we close below this level, the 292.77 level, we're only about $1 away from there. That'll be a new 52-week low close, and that is going to be very negative for next week, in my opinion. So let's see how that plays out. The euro is getting actually crude oil. If it continues down to what we think is going to be the 90 level, it's going to put more and more pressure on this market. So let's see how that plays out. Now we're going to be looking at 3 different stocks. Is it trend up? Is it trend down in these markets? And I want to show you what they were. Adobe had a big move today, actually. It was up over 6.6% right now. And with today's move, now did the trend start up? Yes, we have a monthly trade triangle here. We have all of our trade triangles positive, and you can just put them in. Obviously, today was a buy signal at 28.18, market's 28.21 right now. So it's telling you the market is going higher based on our trade triangle technology. And again, sometimes these signals come in and then you think, oh my gosh, they're not working, but they tend to kick back in again. And I think this is a good example of that happening. And if we take everything off the screen, let me just clear this up so we don't have all this. And just take a very simple look, and that is just a simple line chart. Yeah, I mean, you've had them. This is how I would look at this market, is basically, we talk about pivot points. We saw the same thing, the reverse in crude oil. Okay, here we go. This is the bottom, double bottom, pivot point. If you go from this level, 23, to, let's say, the high 26, it's 3 points. That would take a high of 29, which takes you up to, well, hold on. Yeah, 23 to 26, 3 points. 26, add 3, takes you up to 29, which is right here. And you've come back down. This is probably a Fibonacci retracement. Let's not guess. Let's just measure it. And this is how the markets work. And if you take the time to do your homework, you'll really understand and appreciate the beauty of the markets and how they are become very, very symmetrical. So let's put our Fibonacci tool on. Yeah, look at that. I hadn't even, this is the first time I've looked at this, 61.8%, right on the money. That's a retracement. And remember, we're looking for that in crude oil, some other markets as well. That's a retracement, and the market's coming back up. So yes, I would say Adobe looks good in our eyes. So let's clear everything off the screen and go to our next market. Now, this is a market, the CVC, Cablevision, and let's take this off. This was down, let's see, this is down 14.76%, and guess what? All I have to do is just put our monthly trade triangles. We've got a sell signal on this market at 33.26, and that is just showing you 33.26 on April 7th. That's how trade triangles work. The big surprise was not the market going down 14% today, was the fact that we knew about this based on our trade triangle technology and just how cool that is. I mean, that's really what it boils down to. If you put our weeklies in, you can see the weeklies from 15.40. Again, great trade, lots of money there. And that's the key thing in trading, is trade with the trend and trade with the trade triangles. Now, going into 2012, you've got to have a game plan, and you've got to know what to do. And let's just take this. You've got to know what to do and how to do it. Now, look at this market. What would you do here? It's a minus 60, meaning it is a trading range with a bearish sign. When you see a minus sign in front of the number, and it's a 60 or a 50 or a 65, it means that it's more leaning towards the bearish side of the equation. So that's how we look at things. Again, this market had a little pop, but the question is, we're up, let's say 5%, 5.5% to 47.41 right now. And does that look good? Maybe. I'm not too excited about it. I'd like to give this market some more time. I'd like to see a weekly kick in and say, yeah, that's positive. But you've had 2 monthlies here, very unusual. And I would say you really want to be careful in this market. This is my least favorite market. And I would say probably, yeah, it's just not something I'd want to trade from my own personal viewpoint. But hey, we have lots going on. We also, for those of you who want to come and join us in Salt Lake City in January 24th to the 27th. I'll be there. We have our first ever Market Club Investor Summit. I hope you can make it. You can give us a call at 1-877-219-1482. Find out more about it, extension 1023. The number's on the screen. So give us a call. If you're calling from overseas, you can call us at 1-801-341-3981, same extension 10234. Hey, this is Adam Hewson. There's no update this weekend for the holidays, but have a great weekend and a very profitable trading day. I'll see you Monday.